All right, it says I'm live. I just want to double check real quick to make sure that the live is actually working. Because sometimes collect and escrow, then you must collect 1.5. That's not me. That's an old replay. But I want to make sure the live is working and the sound is working and like that, so that I don't. I'm not streaming in vain, right? So I'm looking at my profile here. I can't even tell. Let's make sure. I mean, people are still rolling in, so sorry if I'm kind of delaying. I'm actually just letting people come in as well, since we are streaming live. And I do want to say that you guys, this class is for you. If any of you guys have any questions, please. Okay, perfect. Thank you, Cindy. Yes, this class is for you. This class is designed as a Q&A. Of course, I have a topic, of course, so that I have something to say while we are going live. For you. This class is designed as a Thank you. I want to confirm as well. Okay, so going live. What's up, guys? This is Larry, the Mortgage Guy, your mortgage insider. And welcome to my Homebuyer Secret Deep Dive on first-time homebuyer tips. Again, this is a Q&A. I do have a topic that I cover, but really I'm here to answer any questions that you may have about the home buying process. It doesn't matter who you are, real estate agent, if you are an actual prospective home buyer, or if you're a loan officer, it doesn't matter. My goal is to educate the general public about the mortgage process. In most first-time home buyer seminars and webinars, first-time home buyer webinars and seminars, sort of gloss over the information because we only have maybe an hour or so to go over everything. The whole point of my weekly classes is to do a deep dive. So basically take up a portion of what a first-time home buyer seminar would be and get really, really deep on it. Okay, so that's why I plan to do this weekly. So basically, I'm taking like a first-time homebuyer seminar that would last maybe an hour, 2 hours, and I'm turning it into like a series of 10 different classes that would last 30 minutes to an hour each. So again, a deep dive. Okay? So let's get started. My name is Larry Lee. I'm a certified veteran mortgage advisor and branch manager at the Larry Lee team at Van Dyke Mortgage. I'm a licensed loan officer since 2016. I made a mistake of telling someone that my wife was in the mortgage business for 2 years, and she kind of looked at me like I was crazy and said, I've been in the business for 5. I'm like, whoops, sorry about that. So I guess I've been in it for a long time, which feels like it was just yesterday that I got a license. I have a side hustle as a social media marketing coach and running my own ad agency, Robots LLC. The reason why I'm mentioning that is because I want to use my social media abilities and energy and time and resources to spread the word, basically merging my two passions, social media and, of course, the mortgage business. And I'm hoping that with you guys watching, you guys can maybe help share or maybe learn something, and then you can share it with your sphere and whatnot. I'm licensed in 11 states: Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, New Hampshire, North Carolina, Tennessee, and Texas. All right, my mission. I love the mortgage business, but I was fed up with the lack of education and information clients were provided during their application process. That means they're actually live in the process of trying to buy a house, and they're not informed correctly, right? So I created a first-time homebuyer class that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify for mortgage clients, as well as being available for one-on-one coaching. What I mean by that is I want clients to be able to get information like they would Google it and get real information like from a loan officer without having to have to talk to me, right? Because sometimes engaging with a salesperson is intimidating. You don't want to provide your information. I don't want to give you my name, number, email. I don't want to give you my social security number. I want to know the information, but I don't want to commit to it yet. So my goal is to provide that they're looking for. Unlike other loan officers, I made it my passion to coach first-time home buyers on the mortgage process, and that makes all the difference in how I help hundreds of people on the right path to home ownership, and many of them are now homeowners. You remind me of many of my smart, successful, and savvy clients who are now homeowners because you are taking the right step to the home purchasing process like they did, meaning you're participating in this call, you're trying to learn, right? Otherwise, why are you here, right? The home buying process is very confusing to most people, but that is why I am here, to simplify and make sure you are 100% prepared in the home buying process before anybody else. And what I mean by anybody else, I'm talking about the competition. I'm talking about people that are competing to make offers on homes that you're trying to purchase. Okay. I want you to be so prepared that you can come in strong. You have all your documentation together. Maybe you can get fully underwritten before you even make an offer. That's something that my company does provide. A little plug there for me. But yeah, I want to make sure that when you go out there looking for homes, there's no one that's going to match your preparation. Okay. My why, of course, my wife and my kids, namely Bruce and Hunter. Hunter is the one on the left with that school picture, and Bruce is the one that's pictured with me. The reason why I kind of highlight those is because they're both on the spectrum for autism. And my goal for 2022 is to have enough resources to provide both of them with ABA therapy. I've heard lots of good things about it. I have friends who have children that went through it, and they said it's a very dramatic change after they go through therapy. So I want to provide that for my sons, right? My other why is, of course, the mortgage business, but specifically veterans. On social media, if you follow me, I'm not very serious. I don't take social media very seriously. In fact, people might say I'm a little unprofessional, but that's just how I am. But this is a post I made that was pretty serious, and it got like over 1,000 likes and comments. So it explains my why. My father was living in Da Nang, Vietnam during the fall of Saigon. My mother lived in Saigon. So basically two different parts of Vietnam, right? It's like almost living in two different states of the United States, right? My father left by helicopter, my mother by boat. It was U.S. soldiers who helped them get in the helicopter and on that boat. They met in Hong Kong, China. If it wasn't for U.S. soldiers, my parents may not have met or may not have survived, met, and had me. And I wouldn't have what I have today. I might not even exist. Those U.S. soldiers who helped my parents are more than likely veterans now. Thank you, vets. I owe you my life. And I literally mean I might not be alive if it wasn't for U.S. soldiers who were simply following orders. They were probably young men and women following orders, and they didn't realize that they were actually helping create families and futures and having people like me come into existence, right? So I owe that gratitude to them. So that's why I'm working to help as many people with mortgages, but also veterans. Someone's asking a question. Oh, I love Da Nang. China Beach is the best. Yes. Thank you, Eric. Da Nang is awesome. It's actually, I guess, considered my hometown because that's where my dad's from. And, in, I guess, Vietnamese culture, it's all about the paternal side. So I'm technically a Da Nang person, even though my mom lives in Saigon. But my mom was actually from the same kind of area. So it's kind of interesting, at least for me, right? Okay. These are the classes I usually teach. I'm not going to talk about all this, but when I do a first-time homebuyer seminar, webinar, especially for like lunch and learns or for potential homebuyers, these are the topics I cover. I'm bringing this up because I do have a replay of these classes in full. So after this class, if you're interested, you can always check me out on YouTube, and there'll be a replay to this on YouTube, so you can actually find the same classes there. And I'll do my best to link it and make it easy to find. Okay, so I'm actually addressing one of the honest answers to top 10 home buying questions. And that question is, it's going to be, what is the first step of getting pre-approved? Okay, I'm going to go back to the disclaimer because it is important to say that. I'm not trying to piss anyone off or make anybody feel stupid, because I do get kind of blunt, I guess. I'm simply trying to provide transparency because most loan officers are doing a horrible job of telling you the truth. Also, any information I share is general knowledge I acquired through training and experience. Every situation is different to a case-by-case basis, and exceptions are always possible, especially with different lenders and financial institutions and states. Okay. And that's the name of my class. And of course, these are the questions that I address on the top 10 questions asked by homebuyers. And again, I'm addressing number 3. So obviously there's 1 and 2, and there's going to be like 4, 5, 6, and 7, 8, 9, 10. Again, there's links to the replay for the class if you are interested. Okay. So I make this really simple. In the video, it's a top 10 questions. I literally make it really quick. I go, what's the first time we get pre-approved? Speak to a loan officer. And after you speak to a loan officer, you fill out a mortgage application. That's basically it, right? And my sarcastic response was, it's a really long form. You're going to get frustrated with it. We ask for your blood type. We ask you where you were last week, and I say just kidding, but actually I'm not kidding about the blood type thing. But where you were last week actually might make a difference, right? Like where are you working? If you just started a job today, where were you last week, right? So we do ask questions that might make you think, wow, they are really trying to get my firstborn, right? And I'm going to go over that today. I'm going to go over the actual deep dive details of the 1003, so that you, I guess whoever is watching, if you're a real estate agent or if you are a borrower, I want to prepare you with what it is that we're actually engaging with. Okay. So what I'm going to do is I'm going to kind of summarize what's going to happen, and then I'm going to get really deep on the 1003. Okay. So when you speak to a loan officer, there's a few questions that you should expect them to ask, right? And I'll give you a couple of reasons why they ask this question. Now, again, I kind of addressed this. I think I have 3 classes. The class that I'm talking about is the questions loan officer should ask before taking an actual 1003, right? Again, that's another class, and I'm talking about those questions, and I'm going to kind of go over them real quickly, okay? We ask about your current situation, like do you own a property right now? Are you a first-time homebuyer? Where are you at? Did you apply yet? Are you looking at houses? Whatever. There's a couple of reasons why I ask these questions, right? I want to know what kind of guidance this individual is going to need, or this couple, or whoever is going to need, right? If they've already applied, they've already been pre-approved, then there's lots of things I can probably skip. Now, of course, not every single loan officer is created equal. Some loan officers, like, I don't want to name any institutions, but let's just talk about the larger ones, right? Some of those people have loan officers that might not know what they're doing, okay? So I can't always give the benefit of the doubt to my colleagues in them explaining the process correctly or asking the right questions or whatever. So I'll give you an example. Let's say someone gets denied by one of the bigger lenders, right? I'll ask them, what did the loan officer tell you when you got denied? And if they kind of give me like some sort of BS, like general answer, then the loan officer did a horrible job of explaining them their situation. The loan officer probably just said, your credit's not good enough, or you don't make enough money, whatever. Try again in 6 months, right? Which is like a total like bullshit move on from a loan officer, right? They really should try to give you some guidance. I mean, I've had people who actually applied and they said they got denied. I go, well, what's your credit score? What did they tell you? And they go, they didn't even tell me that. I'm like, what? They pulled your credit and they didn't tell you what your credit score is and they denied you? Yeah, that's bullshit, right? So I think that I have to be careful when I assume if someone already applied. Now, if someone applied and they got pre-approved, then I would think that the loan officer did a good job in general, right? But of course, I'm going to kind of dig a little bit, right? But the idea is to prepare the client, but also at the same time, know what I'm dealing with, right? I'm getting intel, right? It's kind of like going to a new territory or going to battle, right? I want to know the terrain. I want to know the weather. I want to know, what kind of battle I'm about to enter, right? If they just started, that's cool. That means a clean slate. I get to guide the whole process. If they talk to 5 loan officers, okay, well, who knows why they're talking to me after talking to 5 loan officers? Let's find out. Let's kind of dig, right? But I'll tell you this: if I ask a person where you are in the process, and they go, I'm already pre-approved, I automatically think to myself, that's good. I'm going to go ahead and skip a lot of the smaller kind of detailed questions because I'm going to make the assumption, right? Again, I'm going to make the assumption that the loan officer that pre-approved them knows what they're doing. They probably asked them about their income or whatever, and they more than likely pull their credit. So I'm not too concerned about that person in terms of getting them to the application, because the whole goal is to get them to fill out the 1003 or fill out the application. That's the whole goal, because there's nothing that you can do without knowing what is on their credit and what their 1003 says. You can't really do anything beyond that, right? So that's the goal. That's the close, so to speak. Like from my perspective as a loan officer, and I think real estate agents, you guys might actually think, you actually might consider this as the close as well, is when someone gives me their social security number and allows me to pull their credit. That's when I think it's closed. Now, of course, they can always shop and look at other lenders, whatever. But to me, if they give me their personal information, they're convinced or they're sold or they trust me enough to do that, right? So I consider that, again, a sale, right? That's my closing. Now, of course, I don't get paid until they actually get pre-approved, get a contract, close on the contract, then I get paid. But for me, the start of the process, the turning point is, or the conversion, so to speak, is when I get the 1003, or especially with the social security number. Okay, so that's really the goal. That's really what I'm trying to get to, right? But I asked these questions in the beginning to, number one, consult them a little bit, prepare them, but also see if it makes sense for them to pull their credit. Because I've had people who, and it's common sense, but maybe it's not common sense because I get this a lot. But I'll get people who come in and they'll say, yeah, I don't have a job, I have no money, but I have a 700 credit score. I'm like, well, I don't care if you have an 800 credit score, you have no income and you have no money. What are you doing to apply for a mortgage, right? How do you expect to make your payments, right? You need a down payment. You need to pay for an appraisal. You don't have any money. How are you going to pay for an appraisal? So again, it feels like it should be common sense, but I guess it's not, right? So I ask the questions, of course, to vet the person out, make sure it makes sense to pull their credit, because it does ding them, right? There is an inquiry, so it becomes a permanent change in their situation. And that's the thing. I don't want to change someone's situation permanently, right, so to speak, if it doesn't make sense. So I am vetting them out, right? But it also costs me money. I'm not concerned about that. Some loan officers are. To me, it's a cost of doing business, but it does protect my money. I don't want to have every person in the universe apply with me if 95% of them don't qualify, because then I would go broke. I would go out of business because I would have to pay for the credit pools that I had to give out, right? So there is a reason why you do want to protect it on your end, but for the most part, I want to protect the client as well. Okay, so again, I asked them where they're at. Did you apply yet? Have you been pre-approved, whatever? And then if they say no or whatever, then I'll ask them questions about work. And I'm not going to get too deep into that because that's not the class. But I ask them, do they have a job? How long they've been working there? Is it 1099? Is it self-employed? Are you on a salary? Those kind of questions, right? Then, of course, I ask about funds. Okay, you have funds. Is it in a bank account? Is it cash? Is it a gift? Do you have a 401k? Are you expecting a tax return of some sort? Are you getting an inheritance? Is it in the money market? Is it on stocks? Is it cryptocurrency? So I ask those kind of questions, right? And then, of course, I ask about their credit. And 9 times out of 10, it's going to be wrong if they didn't get their credit pulled by a lender. So if it's like Credit Karma or Experian or whatever it is that these people pay for, they are not inquiries, right? And that's the difference between what I look at and what they're looking at. They're doing a soft pull, which to me, I hate that term because there's no such thing as a soft pull and hard pull. It's an inquiry or nothing else, right? Or inquiry and bullshit. It's the way I look at it, right? What you're looking at, if it's not inquiry, it's bullshit. It's reliable. It's like getting a map without street names, or it's like getting a map of Florida when you're in Texas. It doesn't give you the correct expectations as to where you're actually at, right? You're lost. The only way you can get clarity, the only way you can know where you're going is to get an actual credit pull from a lender, which is an inquiry, a hard inquiry, right? So I guess that's why it's a hard pull and a soft pull. Right. But yeah, I ask about that. After they answer the questions to my satisfaction, and when I say my satisfaction, it sounds like they can qualify, right? Even if they're short on funds a little bit, or their income sounds kind of weird, right? Maybe I'm not sure, but I think there's a chance I'll have them fill out an application, right? I don't ever let money stop me, right? So let's say they have 750 credit scores and they make good income, but they have no money. That doesn't stop me. The reason why I do that is because 2 reasons, actually. Number one, if I can pre-approve them and the only thing that's missing is money, then I've actually pushed them to the furthest extent that they can be, and they know exactly what they need to do in order to get started. So let's say they get approved for $200,000, but you're approved for $200,000, everything's good, but you need $20,000 before you can actually make offers, right? They know where they stand. I mean, that's as simple as you can put it. And money it's the easiest thing to change, right? You can't really change your credit scores really easily, so to speak. You can't really change your job as easily, I don't think, but you can change your money situation. You can start saving, right? Or you can sell something, right? Like let's say you have an RV or a boat that's doing nothing. You can sell that and get some income, right? Or maybe you can get a gift. So I never stop someone if they say they don't have money. But if their scores are below 400 or they're on unemployment with no actual intention to get a job, then I'll be like, yeah, it might not be good for you to apply because you have your credit pulled, and you're not going to qualify, right? There's nothing you can do, right, until you get a job, right? And that's what I say to them. But what I'm thinking is like, how do you expect? I mean, what planet can you buy a house with no job? Unemployment is not going to last for 30 years, right? And people should kind of understand where you need to be in order to qualify in terms of credit-wise. Of course, I'm not saying that you should know the ins and outs, but if you have a 400 credit score, you should know that you're not going to no one's going to give you money. No one's going to make a bet on you. No one's going to invest in you, right? But yeah, so again, I explore their current situation and of course their goals. How much are they trying to buy? Where are they buying? Are they moving to another state? Is it an investment property? Is it a second home, right? Are they going from renting to owning? Are they downgrading? Meaning, or you guys, is it downgrading? I forgot the term that you guys use, but going from a larger house to a small house. What is it? What's the situation, right? So I want to find that out. Okay, I have a question. Hold on, let me check it real quick. Downsizing, yeah. Downgrading is a bad word. Downsizing is better. Thank you, Sydney. I appreciate that. See, as you can tell, I'm not a real estate agent. I'm not smooth enough. So I appreciate that. So after I feel, again, I'm not trying to annoy them because they're going to have to answer this question again on the 1003. I'm not trying to annoy them. I'm just trying to set expectations, right? And I'm also trying to make sure that we're on the same page. And I want to make sure that it makes sense for them to apply because, again, it's serious, right? Like I've heard of lenders who just get people to fill out 1003 and that's it. They do not talk to me until I pull your credit. And that's reckless to me, right? Again, you're spending money that you might not should be spending, but you're also having people like provide all their private information. So now they're actually exposing the information, right? Their social security numbers and everything else, they're exposing, and they might be giving you documents as well, right? And you're also going to permanently have a mark on their credit report, right? You're going to inquire. And if they don't qualify, they should not be having their credit pulled. And even my veteran mortgage advisors buddies would agree to this. You shouldn't pull a veteran's credit if you don't have a COE or certificate of eligibility, meaning can they use their VA loan? If they want a VA loan and they want to apply for a VA loan and they only intend to buy with a VA loan, then you shouldn't pull their credit until you look at their COE. Because if you pull their credit and their credit's good, but they have no eligibility, then you kind of wasted their time and you put an unnecessary ding on their credit because they only want to use the VA loan. Now, of course, they're flexible. Like I've had clients, and I'm not always promoting this, but I have clients who apply for the VA loan, but they wanted to go commission because they wanted to put 20% down, yada, 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 whatever. So they wanted the VA loan, but they went commission anyways. Okay, it makes sense for us to pull the credit without the COE, even though I still asked for it, right? But if their intention is to go VA 100%, then you should pull the certificate of eligibility before you pull the credit, right? So again, there's a lot of lenders out there who are just reckless and just want to pull your credit, and I think that's wrong. Okay, I'm only glossing over this or going over this so much because if you're a buyer and you talk to a loan officer, and the first thing they do is send you an application and say, fill this out and then we'll talk, you need to find another lender. Okay, at least that's my opinion. Okay, so yeah, that's the reason why you need to speak to a loan officer, right? To kind of set the stage and make sure it makes sense for you to go to the next step, which is the 1003. Okay, so the 1003. Now, before I get to that, does anyone have questions? Because it's going to get pretty deep on when I talk about the 1003. Just making sure everyone is able to talk if they want to become a panelist. Okay, great. And of course, you can always ask the question later, whatever. All right, so the 1003, and this is actually something you should pay attention to if you haven't heard about it or thought about it in over 2 years. Because the 1003 was recently updated. It was recently changed, right? It was recently just adjusted, right? They from a loan officer's opinion, it was annoying because our system got all jacked up and changed, and it might have messed up with integrations, and we couldn't find things because they moved it around. A lot of us are like, why did they do this? Why did they do that? Of course, some of us are just dinosaurs. We don't like change, especially when it comes to our job. But eventually you got used to it. I even have like a guide that was provided by one of my mentors that helped me a lot, but I still certain things I can't find, right? I'm only bringing this up because if you haven't talked about the 1003 or looked at the 1003, whether you're a real estate agent or a client in the last couple of years, then you might find some new information when I show you the actual 1003, okay? But basically, the 1003 is the official mortgage application that you fill out in order to get an approval. Now, I want people to understand, before I get into this, I want people to understand that the 1003 is an ever-changing, updating, evolving document, Okay, what I mean by that is what you fill out when you fill out the application is going to end up possibly changing, right? So let's say you think you make $10,000 a month, you find $10,000. We look at your tax returns, and you actually make $5,000. Your 1003 is going to get updated, right? So you might put something like, what's another thing that might change? When you started your job, right? You might put like you started, 01 2020 when we looked at the verification of employment and everything like that, and you actually started in February of 2020, right? So that those things might change, right? And also the 1003 doesn't just involve the actual form, but it also involves the documentation, right? So look at the 1003 as like sort of the whole package, okay? And it has to be accurate, like down to like the spelling of your name, down to your birth date, things like that, right? It has to be accurate. And things in the 1003 tells us what to do. So let's say, you mark that you are unmarried, right? Then, we're not going to, investigate that so much. But let's say you're married and it's an FHA application, like, or a VA application. So it's a government application. And we're in Texas, which is a community property state. We're going to be like, where is the spouse? Like, you're marked that you're married, you're applying for a government mortgage. We need the spouse's information, right? So the 1003 also guides what we do, what kind of information we ask about, what kind of documents we ask, right? So again, I want to reiterate, it's an ever-changing, evolving document. So what you put on your first day might end up be totally different when we actually finish, right? And part of the disclosures mean we have to send you like a bunch of forms and documents for you to review and approve. The 1003 is a part of that, right? And when you sign it, you're basically endorsing that this is all true, okay? So it gets serious when you fill out the 1003. Now, I'm not showing you the 1003 yet because that part gets pretty intimidating. And again, the reason why I don't talk about this too much in the first time homebuyer class, because I'm pretty sure if I showed it to all buyers before they get started, they would probably be like, "No, dude, I'm not filling that out. That's crazy," right? But it's necessary, okay? So I'm gonna go ahead and show it to you guys if you haven't seen one yet. Now, there's two ways that you can find it. Of course, I have my version of the 1003 on my online application site, but I want to show you like the standard form, the form that Fannie and Freddie uses. Okay, so you can find it by clicking this link, or you can just Google. So I'm going to go ahead and just Google it. Actually, I'm going to click the link, see if it works. Okay, the link does work. Okay, cool. So this link is actually talking about the newer, they call it new redesigned improved 1003. Right? And if you look at it, it kind of gives you some updates, whatever. But the part that I want you to look to focus on is this part right here. Because when you click it, it actually will open up the actual form. Okay, this is a standard form. I'm gonna zoom in a little bit. This is a standard form that's basically across the board. Every single lender that's involved in Fannie Freddie, that's involved in Fannie Freddie based mortgages, conforming loans and whatnot. This is the form they use. Okay, this is a standard form across the board. Every lender uses it. Okay, so if you look at it, there's a lot of information they're asking. Okay, and you literally have to fill this all out. Okay, now there was a time where people would actually fill it out by hand. Like they would have something like this, they fill it out by hand, and they give it to the lender, and the lender would input it wherever. Right. Of course, there's technology that helps with this. Whenever I look at my loan origination system, it's totally different. It looks like a bunch of forms that you would fill out, very old school looking, like maybe 90s, maybe even like DOS looking. So it's not like a PDF that we fill out. It's actual like it'll have a dialog box, like name, it'll have a dialog box, social security number, dialog box, right? And it's still very intimidating looking, right? Application. I was hoping to do that. So I'm going to go ahead and just stick to the actual form because I do want to show you the details they ask, right? So you see they ask for social security number, birth date, what kind of citizenship you have. Of course, are you doing by yourself or do you have like a co-borrower? Marital status, that's important, okay? Of course, this information, most people only have a cell phone number, but we would actually apply to both. We do need email. In fact, I think they actually have like a stop where they don't let you do anything if the email is missing, right? Of course, address, they ask you for your current address. If you've been there for less than 2 years, they want the former address. They're trying to get 2 years worth of residential history. They need a mailing address, right? Of course, they need to talk to you about your employer. Now, this gets really granular, right? They're asking for base, overtime, bonus, commission, any kind of entitlements, right? They ask if you are self-employed, how much ownership do you have, right? How long you've been at this job, right? And honestly, the paper version might not be enough. Like, let's say you have 5 jobs. You can't fill it out in this paper version, so that's why the digital version helps with that, okay? Again, they're asking for more information just in case you have multiple jobs. And see, there's like space for like maybe 2 or 3, but not more than that. And I've actually had people who applied who had like 5 jobs in the last 2 years, which was crazy, okay? They also talk about other income sources, alimony, border income, notes receivables. Do you have a trust, right? Unemployment benefits, VA compensation, okay? And, you know, of course, these are the parts that I think changes the most. Meaning, like what you put here, we'll probably end up finding out that's different. Whether it's less or more, it all depends. But we calculate we try to get down to the penny, right? So you might put like $5,000, but it's actually $4,995.68, whatever, right? So this part actually changes. Okay. Let's see here, liabilities and assets. Now, the liabilities part, which is right here, they're trying to get you to tell us what you think you make payments on a monthly monthly basis on, how do I explain this? On debts that you must pay, like credit card debts, like car notes. Maybe you bought a house. I'm sorry, not a house, furniture, and you finance it, and you must pay it, right? So stuff that's on your credit card, something that we'll find in your credit report. So like cell phone bill, light and electricity, gas, water. It's not going to be on there. Okay. And the reason I'm bringing this up because I really actually tell my clients to skip this part, because when I pull your credit, I'm gonna see it anyways. Like, I don't need you to know how much you make payments on. You can give me a general idea, but the credit report will actually fill this in for us automatically. Now, when it comes to assets, again, same thing. Let's say you have 5 bank accounts. I'm not gonna really need you to give me all 5 bank accounts. I mean, of course, if you're using all 5 to make your down payment, then I need it, but I don't need it from you. I can get it from the bank statements, right? Or we have a system where we actually connect directly to your bank accounts, like digitally, right? So I need this, but I can find out through getting the application. Getting the documentation. That's why I said the 1003. It's not just the form; it's also the documentation, because it kind of supports. It kind of brings it all together, right? So if someone's in a rush or they really don't know, I tell them, don't focus too much energy on your assets and your liabilities. Just give a round number. You know, if it's 10 banks, just put the biggest bank account and just put a round number. We'll figure it all out and we'll change it. Okay. Same thing with liabilities. Okay. Property. Oh, this is important too. Okay. Because it's a part of, you know, your monthly obligations, and, you know, we have to be aware of it. You know, we have to check title. There's things that can be a consideration if you own other properties, right? And, you know, it also makes a difference if it's was maybe a property that you bought under an LLC or you have it under trust, right? There's things that we need to consider because it does impact your application, okay? And again, they have a few spots for property, okay? Now, this is, of course, about the loan that you're trying to apply for. What's the purpose? Is it a purchase? Is it a refinance? How much do you want? Is it for a primary, second home investment? How many units is it? Is it a 1 unit or a single unit or detached, or is it like a 4 unit? Is it a duplex? And then, of course, we want to know if you have any other properties under a mortgage or any kind of loan right? Um, do you have any income coming from your properties, right? And of course, this is talking about gifts or grants. Like maybe you are an applicant of a program that they're going to give you some funds. We want to know about it, right? And of course, depends on the lender if we can use it or not. Now, this is the part that's I would consider the most grilling of your individuality, right? Are you planning to live in this property? Yes. Okay. Do you have ownership in another property, right? Do you have a family relationship with the person who's selling the property? Are you borrowing money for this real estate transaction? Like, are you borrowing money from someone to put it as a down payment, whatever? Are you going to apply it for more mortgages? This property, is there a lien on the property, right? This is about your finances. Are you a co-signer or guarantor or on any other debt that's not disclosed in the application? And this stuff is important because I've actually had people who's put no when the answer ended up being yes, right? Like they are a guarantor or they have a debt, right? And that raises red flags, especially if it's not accurate. If they tell me no, but we find out it's yes, we go, why? Why did you not tell us this or whatever? And it usually gets kind of messy because it's almost like they're trying to hide. I'm not accusing people of trying to do any kind of fraud or whatever, but maybe they're trying to buy multiple properties and they want to use different lenders. Who knows, right? But if this happens, like they say they're not a guarantor or whatever, or maybe they're trying to apply for another mortgage and they do it, without us knowing, it just looks like they're trying to get away with something, right? So we're going to investigate. Now, we're not saying that you're doing something illegal or something bad, but we need to know why. We need to know what's going on, right? Are there judgments? Are you delinquent in any kind of federal debt? Are you party to a lawsuit? Are you being sued, right? Do you have any properties that were like under foreclosure or bankruptcies and whatnot, right? So that information is important, right? Because it can affect your application. Okay, and a lot of these things we will have to dig deeper to find. We might not find it on your credit report. We might not find it through just looking at your documentation. There might be more that we need to go deeper in to look for. And it's better if you tell us so that we can address it, right? It's a lot better than finding out at the last minute, and then now we have to delay or maybe even deny the loan because we didn't know, right? That's a few questions here. Yes, monthly recurring debt. Yes, student loans. Yes. Yeah, these are definitely parts of the liabilities part, right? So this is legal, right? They're just saying, you acknowledge that, we're a lender and we're going to take your information to, try to help you get approved. This information might be used for certain reasons. Properties need to have certain stipulations that must, be legal, blah, 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 right? And of course, here's the authorized use of shared information because we are share information with other parties, right? And then we're asking you to endorse it and say that it's okay for us to do that, right? And then, of course, they ask about military service, which of course is important. And this part is where it gets really weird. And some people some people have given me a little bit of pushback on these questions. But the truth of the matter is, you can actually decide not to fill it out. The reason why I'm bringing this up only because I want people to understand we're not trying to discriminate. We're not trying to figure out should we help you because you're either Hispanic or not Hispanic, right? That's not the reason why. It's for gathering of data. I think it's called HMDA, right? To make sure that there is no undue discrimination towards certain people, right? So this is literally for regulatory purposes. And maybe they use it for survey purposes or statistical purposes, but we're not doing it so that we can decide if we want to approve the loan or not. It doesn't matter to us, right? But a lot of people get pushback, but you always have the option to put, I do not wish to provide this information, right? So it's not required. So everything else, for the most part, is like required. It must be honest, and it must be transparent, right? You must represent it factually, right? But here, it's elective, right? we're not going to deny you because you put, I do not wish to provide this information. That's not how it works. Okay. And they ask us, this information that was here, did we get it visually? Like, did we look at you? Did you physically visit me? And I'm making, I guess, an assumption or a judgment, when it comes to ethnicity, sex, and race, right? For applicant taking a person, right? Now, when it comes to demographic information, did I get it over the telephone? Did I get it over email, internet, right? So yeah, this is to be complete by the financial institution, okay? And of course, I got to sign and make sure everyone knows that it's me. This loan is under my name, right? I'm the one that's licensed. So it's my ass if something goes wrong, okay? And I have to sign every single one of these, okay? So that's the 1003. Again, it's really intimidating. It looks really long. I think I'm one of those people where if I saw this, I'm like, I'll get to it eventually, and I'll never do it. Like, I'll be like, dude, this is going to take up an entire day, maybe even more days, more than one day. I don't know if I'm going to fill this out, right? And it gets intimidating, right? So that's why I was hoping to show you the online version, but of course, it logged me into my actual account. But I want to show you like how simple they can make it. Actually, maybe let me see if I can do it offline. Like, I'm not going to show you guys. I'm going to try to see if I can fill out, dummy information. I'm going to call it fake, but dummy information, right? So let me see if I can do that. So you can see, how you can gather information like this and not look so scary, right? So let me see here. I'm logging on my account. I'm trying to, again, create a dummy account. Let's see here. And I've actually at one point was worried that I was doing something wrong or illegal or bad when I did this, but someone from operations told me that it's okay to create a dummy account as long as you don't do anything like you put the actual application, right? Okay, cool. So yeah, so I was able to achieve it. I'm hoping you guys can see my screen here. So I'm going to put my actual information here. And I'm going to put my social security number because I don't want to show you guys that. Yes, yes, yes. Okay, here it is. So here's a digital version, online version of the 1003, right? So there you go. See, they make it simple, easy. They make it clean. It's not crazy intimidating. You can kind of skip around and fill it out however you want, right? Yes, add employment. See, and they basically divide that 5-6 page crazy looking document into like small consumable chunks, and of course it saves your information. So you fill it out and you don't finish, it'll still be there. You always come back, right? You can add the co-borrower's information here, right? Checking savings, I agree. Complete manually. You can put Chase Bank, how much you have in there. Real estate. You can put if you're owning real estate, right? You can put the property of the real estate in there. I'm getting gifts, right? I'm getting a cash gift going to be not deposited, coming from a relative, and then I'm going to review and submit, and it will give me like sort of what we're supposed to see, and allow me to review it, make sure it's accurate, and then press continue submission, and then the application is officially created, and it goes into my loan origination system, and I, as a loan officer, can access it and take a look at it, right? So again, that's I wanted to demonstrate that to show you like the difference between like this thing right here, right, like this, versus like this, right? But that's the 1003. Okay. So I'm going to stop my share here. Does anybody have any questions? Okay, looks like I can't see your name here. Angela. Angela's asking, can a person qualify while in Chapter 13 bankruptcy? If not, how long after closed? So it really depends on the mortgage product, but let me show you. Let me show you like sort of a chart that I've used in the past, and I can share this chart. This is something that it's like I wouldn't call it a meme, but it's like an infographic that's shared a lot, and I use it as sort of like just a basic guideline as to what kind of expectation to have, right? When it comes to bankruptcies and foreclosures and the difference between Chapter 13 and Chapter 7, right? So let me get that open real quick. Okay, so I'm going to share my screen real quick. Where's my Zoom thing? Here it is. Make sure we get the right screen. Can you guys see that? I know it's kind of blurry. It's a JPEG, but can you guys see the chart that I'm showing? Yeah, sorry. I can zoom in a little bit, but you can find this online. And in fact, since I'm mentioning it, I'll attach it to the email when I send the slides out. Okay, but like it tells you, like foreclosure, if you're looking at a Fannie or Freddie, meaning like conventional loan, then you have to wait 7 years. 3 years with extenuating circumstances. I don't want to get into that, but it has to be like a really special situation why you were in foreclosure. If you can document and explain it, then there's a chance you can cut the time of waiting literally in half, right? So Chapter 13 was what was asked, right? There's actually two parts, it looks like. Right here, it says 4 years from dismissal date. Okay, if you're going Fannie and Freddie. 2 years with extenuating circumstances. FHA is 12 months. But it requires a manual underwrite, which not every lender provides that. We do at Van Dyke Mortgage, but a lot of lenders don't provide manual underwriting. Manual underwriting means they can't use the automated underwriting system. AUS is what we all use to quote qualify people. And AUS basically tells us what we need in order to make sure the loan is sellable, right? So it's an automated guiding system to let us know if the loan can be approved and how it's sellable it is, right? Well, with a manual, you can't use the automated underwriting system. It has to be a manual underwrite, which takes more work, time, energy, a lot more scrutiny, a lot more documentation, etc. But it's a way to speed up the process. FHA 12 months, VA 12 months, USDA is 12 months. So basically, governmental loans 12 months or a year. Conventional loans, Fannie and Freddie, 4 years or 2 years from dismissal date. Okay. So hopefully that answers your question. Oh, right here. Let's see. This is. I'm trying to look at the difference between this one and this one. Oh, discharge. So you got dismissal and you got discharge, right? So discharge is 2 years from discharge date for Fannie and Freddie. FHA is also 2 years discharge, which allows automated underwriting, which is kind of cool. But yeah, hopefully that answers your question. No problem. Any other questions? I'm trying to make sure I add everyone here. Very cool. Any other questions? Anybody want me to go back and review anything that I talked about? Audrey asked, can we get a copy of the chart? Yes, I will try to find a clean version, maybe even a PDF version. And as part of my follow-up, because I send a follow-up where I send the slides to the presentation to all who attended, I will make sure I will add a clean version, a readable version of that chart. I'm going to write it down right now, actually, so make sure that I do it. So we'd follow up with derogatory chart. That's what they call derogatories. Okay. Any other questions or maybe ahas, things that you learned that you may not have learned before you, or things that you learned that you may not have known before you joined this chat? Okay, so then we will move on. I really appreciate you guys being on this call. You can always contact me anytime, Larry Lee, 832-606-2193, or email LLE, my first initial and last name, at VanDykeMortgage.com. Van Dyke does not have an E. And then you can always Google Larry the Mortgage Guy. You'll probably find me, or put Larry Lee Lender or Larry Lee Mortgage. You'll probably find me. And you can go to LarryLee.com, which it provides like a landing page where you can find like my most trending YouTube videos, free classes or coaching classes for people trying to buy a house, and free assets and resources for real estate agents. Doesn't matter if you and I work together, I don't care. It's free to everybody who wants to get involved in that. Again, I really appreciate you guys being on this call. And of course, if you have any questions, you can always reach out to me anytime. And I really appreciate it to me. Like I said, give me a call or email me if you have any questions. All right. I really appreciate you guys being on this call. This is Larry Lee Mortgage Guy, your mortgage insider. I'm out. Bye, guys.